to end a solid agenda. We have one of the absolute OGs of this industry in a conversation with, of course, Yeji Lee from Insider. I won't take her thunder and introduce you, Andrew, but it's good to see you, man. Glad to have you back.
Good to see you, Elliot. Thanks for having me.
Thanks, Elliot.
Thanks.
Elliot, I don't know how you've done this all day, but have you been doing this for 6-7 hours now? So good on you. Hi, everyone, and welcome to this Fireside Chat. I'm Yeji Jesse from Insider, formerly known as Business Insider, and I cover the cannabis and psychedelics industries here. I'd like to introduce everyone to Andrew Thutt, Chief Investment Officer at 4Front Ventures. Andrew was an early investor in the company before joining 4Front full-time in 2014. Before entering the cannabis space, he served as Managing Director of the BlackRock Small Capital Growth Fund and held positions at MFS Investment Management and BT Alex Brown. 4Front is listed on the CSE under the ticker FFNT and on the OTC as FFNTF. Thanks for joining us, Andrew.
Thank you for having me. Pleasure to be here.
Yeah, now to get us started, why don't you give us a short 1-minute overview of 4Front, how it came to be the company it is today, and what makes it different from the other MSOs in this space?
Yeah, so 4Front, started back in 2011 as a consultant to the industry. So we were helping clients win licenses, and then our operations team would help them get up and running, those consulting clients. And in 2014, 15, basically 4Front started to leverage our expertise in application writing and on the regulatory front to go in and win licenses in competitive states. And we also put together a portfolio where we acquired in some states. And so currently we have operations in Washington, Massachusetts, Illinois, Michigan, and we are entering the California market imminently. And I think if you boiled down 4Front's investment thesis to a couple sound bites, our facilities in Washington have dominant market position in that state. So we're the number 2 flower producer, the number 1 edibles producer. And what we figured out working in such a competitive state is how to produce, not only the flower cannabis, but all the derived products at a really low price. And if you can offer customers a really good product at a great price, you take outsized market share. And that's exactly what our products have done in Washington. And so the thesis for 4Front is really replicating those cultivation techniques and those manufacturing techniques that have been so successful in Washington into the rest of our portfolio. We have proof of concept of that in Massachusetts and Illinois, and we are currently, opening 170,000 square foot processing center in California. Will be opening imminently. We're basically taking that low cost production from Washington and putting it on steroids to address that market. So we think that people are going to talk about low cost production a lot more in the years to come as cannabis continues to commoditize, and we think it's going to be absolutely crucial that businesses figure out low cost production to be competitive.
Now let's dig into this a little bit. 4Front's big strategy, as you said, it's low cost production. Can you give us a little bit of color on exactly, how that works and what you guys do differently that makes you distinguished from your competitors?
Look at a lot of the other MSOs and some of the bigger ones that have been super successful. GTI, Trulieve, Jason Weil was just on TerraSend. They all operate in limited license states, and we love limited license states. Massachusetts and Illinois are certainly fit that bill. But because they operate in limited license states, they've never had to deal with a hyper competitive market. And what we've done in Washington, out of our facilities in Washington, there were unlimited licenses when that state opened for recreational, and I think something on the order of 1,600 cultivators got licenses in that state, and so there was this huge supply glut, and that pushed prices down. And so what we had to figure out in our facilities is, how do you compete in this market where prices are continuing? Prices went from about $2,500 a pound, all the way down close to $600 a pound. And how do you survive in that market? Not only be competitive with your product, but figure out how to make some money too. And so, having operated in Washington for 6 years, there are a lot of skin knees, as we like to say internally, and we figured out how to automate where we could. We figured out how to, adjust the HVAC, adjust the strains. It's not how we do purchasing of all our supplies. So there's not one sort of magic bullet that makes us a low-cost producer. It's an amalgamation of things that we've learned how to do over 6 years of operations in a really, really competitive state.
Now, you guys are big in Washington, but you've expanded into now 5 states. How difficult is it to sort of replicate that low-cost production in every state that you go to, especially since, you have to build everything from the ground up all over again?
It's difficult. I mean, cannabis is a hard business. Everyone sort of thinks, you flip on the lights and the plants grow and you sell it and everyone makes millions. It's a really complicated business in terms of, you have crop failures and, you have local supply chains. It's highly regulated. One of the things that we're most proud of that we've accomplished in the last 15 months here at 4Front was, okay, it's all well and good to have this thesis that you're going to replicate what you've done what your facilities have done in Washington and other states. And then there's a whole nother thing to say, okay, well, prove that this travels, prove that you can do this. And so over the last 15 months in Massachusetts, we've introduced all of our tried and true strains, all of our growing techniques, all of our we have 25 brands, over 1,000 SKUs of products that we've introduced into the Massachusetts and now Illinois markets. And the reception to those products has been phenomenal. People love the quality, people love the availability in our stores, and people love the price. And that has, started us on our way to get, outsized market share in the states we're in. But it's complicated. And what we're doing in California right now is, we are just finishing what we think is the largest cannabis processing facility in the world, where we have the capacity to do about $500 million in revenue out of that facility. And so these are tough. We applied all the lessons from Washington to build this. Basically, we took our Washington automation and policies and procedures and put them on steroids for the California market. And, we're going to see the rubber hit the road here this summer, but it's difficult and you got to know what you're doing. It's hard business.
Give us a taste, Andrew. What are some rookie mistakes you guys made in the beginning? I don't want to say rookie mistakes, but, mistakes that you wouldn't have known to address when you first went in that you feel like would be good advice to give others now.
I think that, a couple of the rookie mistakes we made is we got a little bit ahead of ourselves on, our expansion. And so money was really hard to come by in this industry, and liquidity and access to capital has improved greatly. But, people sort of said, wow, this is great. And what an opportunity to, cannabis is legalizing. Let's get a license in every single state we possibly can. And the problem with that is you have to build facilities in every single state that you get into, which costs a lot of money that you have to pull together. And then you have to have the operating talent to go and pull it off. And so I think there were, a lot of us in the industry that, got a little ahead of ourselves in terms of wanting to be everywhere. Where I think that what's probably most important is that you go deep and you get great market share in the states that you're in. So a little bit more focus. It was or lack of focus, I think, was a big mistake that a lot of operators made early on. I also think that no one knew how to grow cannabis indoors in Massachusetts or in Illinois. There really wasn't a whole lot of talent pool to draw from. So you had a lot of California and Colorado growers coming out east and totally underestimating, how much humidity there is in the East Coast and how that would affect the grows. There was a lot of underinvestment in HVAC systems, and that led to crop failures and all sorts of heartache. So here we are. Being called an OG was kind of scary, but my 7th year in the industry, and the lessons learned are a mile wide, but I think that those two things, sort of going deep and not wide, or going deeper and not overly wide, and making sure that you aren't growing so fast that you can't support it from a capital and a human capital standpoint.
Exactly. I feel like that's a good lesson to have learned early on. And I feel like a lot of people learn that lesson early on. In terms of your strategy for choosing which market, which state to enter next, what do you guys look at? Whether it's, regulations, population, culture?
So early on in the cannabis industry, the most attractive states to be in were what we call limited license states. So in Massachusetts, for instance, started with a handful of people were licensed, and it was really hard to open stores because the towns had restrictions. And so what you were looking at is a market that's 6 million people in Massachusetts, and there were a pretty limited number of suppliers, and there remains so. And what makes that attractive is obviously you have less competition. But the second piece is that if there are fewer suppliers in a state, that means the prices in the state are going to stay higher for longer. So we think that limited license states, which basically most of the East Coast is a really good place to be, with the exception of the fact that we couldn't ignore California. Because of our success in Washington State, we thought that we think and are highly confident that we're uniquely qualified to go into California and take a lot of market share, because not a lot of folks have spent the time on low cost production and have the brands and products that we can produce at a really attractive price. So, sort of speaking out of both sides of my mouth, but we like markets that are big and have a lot of potential to grow with limited licenses, but we aren't afraid to jump into a state like California, where we know that we're pretty uniquely qualified to go in and take a lot of share because of our low cost heritage.
For sure. What's the next state you're looking at, if you're willing to show a little bit of detail, or if you don't want to name names?
No, I mean, we feel like the assets that we have in our portfolio, we've done a really nice job of getting them up to the standards that we're seeing in Washington. And we're at a point now where we're starting to hit our stride, we feel. And so we want to, if you're successful doing that with assets, you obviously want to start collecting more assets. So the short answer to your question is we have an application pending in New Jersey, which is a fantastic state. It had a very, very small medical market to start, and they're pushing hard on having it be a bigger medical market, but it's obviously recreational. So we could go, if we could get that license here, and obviously we have to win it, but we were expecting to hear sometime this quarter. That would be a terrific state for us. There are other states that are on the cusp of going rec. Maryland, being a producer in Maryland would be an interesting state for us.
Interesting.
Yeah. So basically, big populations, limited licenses, and the rec program, or they're either medical going to rec, or the rec program's still pretty nascent. Are all appealing options for us.
For sure. Let's talk about your products for a minute. You guys have around 25 brands across flower, tinctures, edibles, topicals. others. We talked a little bit about how your low cost production allows you to be able to do that. Can you explain a little bit how exactly that works and what strategies you've used in order to expand that quickly?
So in Washington State, our facilities, are the closest thing that I've seen to CPG or consumer packaged goods in the cannabis industry. You walk into our facility, it's 40,000 square feet, 200 people, 3 shifts a day, 24 hours a day. And, you walk in and you'll see something highly automated. And you juxtapose that to, what you see on the East Coast. You'll see someone with, baking pot brownies or filling up vape cartridges with a pipette. There's no automation. So because the prices are high, in some of these East Coast states, you can just continue to throw labor at it. And so what we figured out is, how to automate, the production of our infused products. And that's everything from infused pre-rolls to vape pens to a whole gamut of edibles, tinctures. And we've refined those production techniques. And so what we offer our consumer is a really good product at a fantastic price. And because we can produce it at scale, we can lead with price. And so what we say at 4Front, we have all these wonderful products that have, top market share in some of the most competitive markets in the country, namely Washington. And we did that with very little advertising. We did it by giving people a product at a great price that they really enjoyed. And so the way that we think about brands is we think that, frankly, at this point in the cannabis industry, brands are a little bit overrated. No one's walking into my store in Georgetown where we do, $2.5 million a month or about $2 million a month. No one's saying like, where's my XYZ celebrity strain? They're just not. They're coming in saying, what's a good product at a great price? So the way that we think about brands is that if we can give consumers an excellent product at a great price, and we can take a lot of market share in every state we're in, all of a sudden we'll have national brands, and we'll have done it without a lot of the gloss and folderol that you have with celebrity endorsements and all that stuff that I think is going to be ultimately not drive the successful brands when you look out at this industry 3 to 5 years.
Yeah, it's really interesting that you say that. I feel like we have not seen any national brands as of late, just because it was not possible to do that. There weren't enough states to be able to really do that. But when do you think that shift is going to happen, Andrew? When can we see brands actually become national and people begin to recognize things that they really enjoy and consistently buy?
Look, I think right now the only real and truly national brand is Cookies. And outside of that, everyone's kind of fighting over each other. You can look at there was a line of thinking 3 years ago that, all the great brands are going to come out as California. California's got this really strong cannabis culture and look at all these, it's sophisticated consumer base, and wow, all these brands are coming out of California and they're all going to be the winners. If you actually look at the data in California, you'll see there's very little brand loyalty. Brands hop all over the place in terms of who's on the top of the leaderboard. And that's because it's really price competitive. And so even if you have an incredible product, you have a premium vape pen that's a sauce pen that's full spectrum and blah, blah, blah. You undercut that guy by 30%. You start to take all of his share. And he can't come down here and make money because he hasn't figured out low-cost production. So I think brands are coming. Like, we are just seeing it in Washington. We're seeing, people coming in for not just, the price and the quality, but they're saying, hey, their Funky Monkey, which is our premium flower brand, it's really consistent. And it's always fairly priced, and I'll take whatever. So that's 6 years into Washington. We're seeing that. So I think that, we're probably 3 to 4 years out from any real national brands. And I think that, we're all just sort of, there are a lot of brands swirling around. Everyone's paying a lot of attention to it, but I don't think there are any clear leaders yet. And I would submit that the leadership will have to have figured out low-cost production to have a leading brand.
Now we're almost out of time. I think we have around 2 minutes left. So Andrew, I'm going to ask you a question that I would like you to answer within 1 minute. You sort of entered the cannabis industry as an investor from an investor's perspective. What's your advice for, institutional/retail investors who are looking to get in on the cannabis industry? What sort of quality should they be looking for in a company, and how can they find that information?
I think that it's mostly important. It's just so important to not buy the hype. You have to do a little research on, is this a good company? And the only way that you can really tell if it's a good company is if you dig in and you see, are they driving revenues? Are they driving profitability? How are they allocating capital? So, it's an interesting market right now in cannabis because the big institutions can't play. Fidelity's on the sidelines, BlackRock's on the sidelines because they can't invest in U.S. plant-touching companies, and so that leaves a big chunk of our investor base is folks buying these things in retail accounts, and there's a big hype machine around how retail investors get their information, and you can make some good trades, following some of the hype and who has good momentum. But I would just strongly urge everyone to, really make sure that the story makes sense that they're being told, and take the time to dig into the fundamentals, because I think there's a ton of money to be made in this space from here.
Thanks, Andrew. It looks like we are right out of time. Everyone, that was Andrew Thutt, CIO of 4Front Ventures, and I'm Yeji Jesse Lee from Insider. Thanks for joining us.